Thanks, Sarah. Thanks, Renee, and good evening, everyone. I'm pleased to be here tonight talking about cash settlements from a community law point of view, wearing the RAS hat. So, cash settlements, let's get underway. I'm going to be deliberately brief tonight because there's already a lot of really good information out there. There have been previous seminars on this issue or similar issues. So there was one on the 30th of April, Understanding Your Cash Settlement Offer. One on the 14th of May, Cash Settlements, What Are My Options? And last week as well, Understanding Your Cash Settlement Offer as well, and tonight's one too. So there is good information out there, and I highly recommend it, including the question and answer sessions. First of all, the first issue is, isn't a situation where you have to accept a cash settlement, or can you have a managed repair or a rebuild? That's been quite a topical issue since about March of this year. In terms of EQC claims, the Earthquake Commission Act, Section 29, does say that the Commission can settle claims either by cash or by reinstatement. And in terms of most insurance policies, they do give the insurer the option of paying cash or reinstating damaged property. But that's not the end of the story. So if EQC or insurer has said that they will accept you into the managed repair program or they will rebuild your house, then they may be bound to do that. And so there are a number of causes of action that you can rely on. One of them is Section 9 of the Fair Trading Act 1986, which says that no person in trade may engage in conduct that is misleading or deceptive. So it means that you can't say one thing and do another. So if you've said that you're going to do a repair, then the person has relied on that, then you may be bound by that. Equitable estoppel is another one, but that relies on there being an unequivocal representation, so it's a little more difficult to prove than the Fair Trading Act. But if there has been a statement to that effect, which is clear that there will be a managed repair, then an insurer or EQC cannot cash settle halfway down the process. And the doctrine of election is another example, and that probably covers a situation where either EQC or insurer has applied for building consent with the intention of carrying out the building work. They can't do that and then somewhere along the process say, right, now we're going to cash settle this claim, here's the cheque. They probably would be bound to ensure that you could have a managed repair or a managed rebuild. I think it's really important to understand the differences between cash settlement and managed repair, because what you're doing here is you're making decisions which are going to have quite far-reaching implications. This is your house, probably your most valuable asset, and you need to make really good business decisions about it. So let's talk about cash settlement. One of the strengths of the IAG policy and their approach is that the cash settlement does give you a lot of flexibility, so the funds can be used for a range of purposes. You don't have to put them all into doing a repair or a rebuild on your existing site. With a cash settlement, if it is full and final, it means that you cannot revisit it. You cannot say, but actually this costs $20,000 more, can you please pay the difference? The answer is likely to be no. So full and final means full and final. With a cash settlement, where there is risk about cost escalation and that kind of thing, that's dealt with by payment of contingencies, and that's an industry-wide practice. With a cash settlement process, when there is a discharge and the money is paid out, that's the end of the process. It doesn't go beyond that date. And with a cash settlement process, there is no independent oversight as there would be with a consentable repair or a consentable rebuild, where there would be council inspectors and a code compliance certificate at the end. However, it's strongly encouraged, as Renee said, to seek advice depending on what issues are raised by your cash settlement. So moving away from cash settlement to a managed repair, with a managed repair, you have less flexibility. You can only use the funds for the purposes of the repair or the rebuild. But it doesn't end when the building work ends necessarily. So there would normally be a defect list Under the Building Act, there's a period of 12 months where you can go back and require a builder to remedy any defects. Also, under the Building Act, there's a 10-year period where potentially a builder can be liable for substandard work. If there need to be variations to the building contract because new damage is discovered, then that is dealt with by variations to the contract. What happens with a variation is that the builder or project manager will go back to the insurer and say, do you approve of this variation? And if it's for earthquake damage, they will approve. If it's not, they may not approve. So if they approve of the variation, then the contract is varied and the risk is dealt with in that way. And finally, for a consentable repair, there will be council inspections, and so there is independent oversight through the building consent process. And for exempt repairs, often a producer statement, PS1 or PS4, is required. So for foundation repairs, that means that there will be engineering sign-off. So you do have that comfort in that process. So moving back to cash settlements, what issues do we need to be sure that we've covered off? First of all, both parties, both the insurer and the insured, should agree about the extent of earthquake damage. If there's not agreement, then that can be a problem, because if you go to cost of damage, you might not be costing the right damage. So the homeowner, you want to capture all of it. So all the earthquake damage you want to capture in that scope. Then there's the issue of the appropriate repair methodology. And you may need to engage an engineer. You might need to know how the site's performing. Is it TC1, TC2, TC3? Is it good ground? Are the ground conditions variable? What is the bearing capacity of the land? You might need to know whether it's possible to re-level a foundation or whether a full foundation replacement is required, whether a house needs to be lifted. So there are all these sorts of questions that need to be addressed. And overall, you just need agreement on the scope of works. When you get to the costing stage, and so you've agreed on what's going to be costed, then you can go to a quantity surveyor who costs how much building work costs, and they will go through every item and work out how much a fair and reasonable assessment of it is. And that assessment should include key things such as the cost of enhanced foundations, which is quite a high percentage of building costs, especially on TC3 sites. It should also include the cost of professional fees, which Renee referred to earlier as well, and that may vary from site to site. It should include contingency costs, so there's some cushion in case the building work costs more than initially anticipated, and other miscellaneous items, things like contract works insurance and allowances for temporary accommodation, those sorts of things. So as you can see, it's not just a matter of receiving an offer from an insurer and accepting it, but there's a whole process to work through, and everything needs to be ticked off as being correct. So overall, there needs to be a proper basis for any cash settlement amount. Finally, what's the appropriate forum? And certainly for scoping issues, there's no substitute for a site visit. Walking around with the loss adjuster or whoever's assessing the damage and just checking that they have captured everything. As a homeowner, you really are the expert. You know what it was like before the earthquakes. You're probably aware of where most of the damage is, whereas someone who's just there for a couple of hours, first time they've seen the house, they have much less knowledge than you do. So don't be scared of drawing on the knowledge that you already have. Sometimes to address those sorts of issues, it can be good to have a meeting at an insurer's office. Face-to-face is always better than relying on emails or picking up the phone if you're talking to someone new all the time. Sometimes it can be really helpful to meet at an independent venue. You might, if there are trust and confidence issues, to be somewhere where no one seems to have an advantage can be a good way of going. And it might help to have an independent facilitator. At RAS we have facilitated meetings where we have trained facilitators who are also mediators, and they can set down what the process is so that it's fair to both parties. Both parties have a chance to have their say. And that can be really helpful because the length of time it's taken to settle these claims has been difficult for everyone. And sometimes it's really hard to stay constructive and solution focused, but really meetings, it's important to make the most of that opportunity to make as much progress as you can. It's also good to be really clear about what the issues are, because you may need to have experts attend a meeting so that they can address issues such as how the site is performing or what is the appropriate repair methodology. And so you want people who can comment on that. So if they are needed, then they should be there. Otherwise, you might have to reschedule a meeting, which just drags things out a little bit more. And finally, what process is going to help you? So do you have such a good relationship with your insurer that a one-to-one negotiation is going to get it sorted? Or do you need an independent facilitator? Or are you poles apart that you just need to find someone who can decide who is correct, such as an arbitrator or taking matters to court? I think it all comes back to the process. So you have to think of what your own circumstances are and how the process can be tailored to meet your needs, as well as the interests of the insurer. Insurers want to get these claims settled as quickly as they can because they need certainty as well when they're dealing with their reinsurers. But as homeowners, you also need certainty as well, because this has gone on for quite a long time and it would be good to get it all sorted out so that people can move on.